Gold keeps on going. Has it gone too far? Is it overbought? What should I do with my capital? This is the sort of question that we're hearing all the time. But it's also the sort of comment that we've been hearing for the last few weeks and months, and yet gold has continued to grind higher to $4,000. And as we saw with the Nasdaq over the last 10 years, something that's overbought can remain overbought for a long time. But I specifically wanted to ask Eric, what would you do if you thought that gold was now overbought? Would you shift your capital into other assets? Would you just hold fire and just keep on going? Or do you think that there is a risk of a pullback? Now remember, everything that we talk about here is not investment advice. It's for engagement and entertainment purposes only. If you're going to invest, do your own homework, understand the reasons why you're investing, and then invest accordingly. What are some of the things that you would do if you thought gold was genuinely overbought and had got in over its skis now?
Yeah, I mean, those are two separate comments that a lot of people make. Gold is overbought or the top is in. That's two different things. The top is not in gold because I will tell you, like anybody, especially if these people that are talking to you have any market experience and are at all savvy, after you have a almost 13-year consolidation in an asset class that then breaks out, we've been it's been about 18 months and gold has really doubled, which is way more than I thought that we would have in that condensed period of time, and it's way more than gold typically does. But new real bull markets like that, quadruple top breakout, 13 year consolidation, they don't last 18 months, Roger. They last a lot longer. So the trick is during the bull market, yes, I obviously paid close attention to overbought and oversold scenarios. So I'm pulling up right now on the daily chart, which and RSI is at 83. So it's not that bad, right? It's been above 70 all through the month of September, October. We know that in bull markets, my whole thing is I tell people you have to get used to averaging up because we're not in a bear market. You have to average up, but that doesn't mean you chase things haphazardly. So on the daily, is it overbought? It's getting a bit overbought, but it's nothing crazy. Gold will correct, and it will correct pretty hard. I think. I give the example of 1974 to 76, where you end up having gold cut in half before it goes to 850. Some people can't stomach a 50% drawdown, and I don't know that gold's going to have a 50% drawdown, but I would expect at least a 30% drawdown at some juncture in maybe it's somewhere in the middle of the cycle, but I don't think we're not that long in the tooth in the cycle at all. It's just saying that the top is in gold like forevermore or whatnot, is just people that don't understand bull and bear markets, secular and cyclical bull and bear markets. So I've been telling people, look, you never want to sell your gold ever if you can afford it, because it is your asset of last resort in terms of storing a buying power, purchasing power over long periods of time. My research tells me that the way that gold tends to move, even though it's pretty aggressive now, like on the longer term chart, I think we probably have a strong gold bid until the end of the year. I don't, we might have one little flush, but I think it won't be the flush where you're going to get people scared out of the trade, or out of the investment. But when it comes to precious metals, I would say that silver is acting beautifully, even though it's underperformed gold quite a bit. Silver will outperform gold, I believe, going forward. And the real thing you have to watch out for, where you're getting up, whether it's an interim top or a top in the next, call it, a couple of years or even couple months, something like silver will end up breaking that $50 an ounce. And then, so you're going to see overbought and times where you maybe want to take a few chips off the table. but silver is extremely undervalued. I mean, it has not even broken its 1980 high yet. So silver hasn't even started getting going. But palladium, I've been talking in the newsletter for the last couple of months at least. PALL is the Aberdeen Physical Palladium Fund, which just in late August was at $100, and it was a pullback from like 120. So a lot of room to go on that. So the point is, yeah, if gold's leading the way, it won't lead the way forever. It will have sharp pullbacks, but don't forget the other precious metals.
And last time we talked, you said, we talked about has the train left the station? You said it's less the station, but it's probably only a third of the way to its destination. But I guess the other question here is, that's the absolute level of gold. But then when we talked about the S&P, is it that these ratios that we've got that seem to favour gold? Is it actually that we may be in for a phase where it's the S&P that underperforms? So maybe it's risk off where gold becomes that defensive asset. And maybe that's what the charts are saying with these ratios looking quite juicy in favour of gold. Not that gold has another leg higher, but actually maybe gold's going to revert to that defensive mechanism that we've also seen gold perform over the many, many years.
Very important point, because I remember distinctly in November of 2021 when I was sitting on incredible profits from speculating in the altcoins, where I was just vehemently selling those, throwing it into accounts that I don't look at for cash, bought some real estate and buying, chunks of gold. And then a year later, we had I don't forgot how low the NASDAQ was down from there. It was a lot. And then Bitcoin was down like 60%. And my gold was down 1%. So, but defensively in that scenario, gold did great. Now, gold was also under 2000, and now it's had a monster run in a short period of time. But the best thing to do is, say, for example, you feel like you have to have a gold allocation, just buy a third or a half of your position now in case it keeps going, but have the rest of that money on the side for when people are scared to buy gold, because it is in a really harsh correction, so that you can put the rest of your money to work. That might happen from higher levels, but I always feel better buying on, good dips. I think you're absolutely right in that, in the defensive stature of when we do have a flush and or recession and or whatever, gold will do better, but it will be just on more of a defensive nature. It's not like gold's going to split. But versus Bitcoin, the fact that gold has outperformed Bitcoin so much, I would be more inclined to say that Bitcoin will take over the performance of versus gold pretty soon. Um, and again, these things aren't supposed to compete, they're compatible. I've been saying this forever. I don't expect gold to outperform Bitcoin because it shouldn't. It's crushed Bitcoin, this last year, it's crushed everything. So I think that's playing a lot of catch up, but I wouldn't, count Bitcoin out of that equation in terms of potential outperformance versus gold.
You've always said, from the very first time we had a chat on this, is that gold and Bitcoin are both there as defense against fiat, but one is defense and one is offense, and Bitcoin and crypto are more offense and gold is a defense. Sounds like right now you think that we are in a position where, if you've been in gold, if you've been lucky enough to, let's say, been in the break of 2300 and ridden it up to 3900 today, it is legitimate to think about taking some of those profits and putting them into sensible parts of the crypto sphere, as it were, mainly Bitcoin.
I would, but I wouldn't touch my allocation to precious metals. Get your cash from somewhere else. Get it out of your money market account. Get it out of some of your equity positions or your S&P 500. But it all depends, Roger, as you know, like, what is your personal scenario? I'm not your financial advisor. This isn't financial advice, but you have to have an allocation in gold and silver. You have to have an allocation in there, and you have to have it in there without worrying about what the hell's going to happen in the next 6 months. But 85% of my net worth is split between metals, mining stocks, and cryptocurrencies. So, and venture investments in tech, So, like, I'm in a position where the higher this stuff goes, yeah, I'm going to start taking some risk off and maybe just shove it into cash.
And then you mentioned obviously silver, because silver has been making its way back up to that all-important 50 level, which we just talked about earlier. I think it's 48, 49, so it's there. Is this one of these things where, if people want to wait a little while, if they're not in, maybe on a break of that 50 level, which again goes back, as you said, to 19, I think it's 1980 and the
Yeah.
classic, was it the Hunt Bull market that we had back there?
So you better be ready. If you're going to wait for the breakout and you want to wait for a real technical breakout, maybe you wait on the monthly end of the month or whatever for the monthly chart to even confirm that and pay $55 an ounce. You need to be long a lot of silver at that point because the upside, I mean, the thing is trading below where it was in 1980. And now you have so many new applications of silver for solar panels and all kinds of other things that are taking up like 25% of all of the supply out of the ground. It's very underowned, very undervalued. Silver is going to, and the way silver works, it'll be a shocking move, nothing less. And then look at the same thing with platinum and stuff. So I think you have to have this stuff on the books if you really want to get it in the game and make oversized returns in the metals and mining, you have to be in the mining stocks.
So basically, in summary, it sounds like your comment would be that yes, on certain basis we're overbought, but your view would be if we got the pullback, or you'd be looking for that pullback to move more capital in from other less exciting assets.
Yeah, and I do. I'm with technical analysis. I use really simple tools that I like. And so right now, while we were talking, I took the 10-year chart on the tops that have been hit from 2016, 2020, and then earlier this year, where you're looking at a straight line of tops on gold. We just bursted through the top line. So I think gold is going to remain overbought for the next couple few months, maybe 6 weeks at a minimum. But then I would, with the cautious side of it, gold is at 90 on the RSI on the 10-year chart. I mean, I've seen plenty of things that stay around here or even get to like 95 or 6% and before they're going to end up really kind of falling off hard. And trust me, I like to buy things when they're at 15 or 7 RSI. Okay. Things that are very, very oversold is where you get the best deals. But, gold is just very important, man. I mean, the governments of the world that don't have any income other than from us, its citizens, um, are levered so big that the majority of nations are never going to be able to pay back their debts. So, what is that going to look like? That's why the central banks have been chasing and hoarding gold. If you're going to get a gold allocation and you're low on it or you don't have any, take a third of a position of what would be ideal of what you want, like 10% of your investable assets or 5%. Buy some now in case it keeps going, but keep money there. And remember, don't turn into a wuss when it gets shaken out. That's when you become the guy who buys low and sells high. And so add on pullbacks. That is the way to go. But we just broke out of this, this top channel in gold. So even though it's overbought, probably have more room to go short term. So say it goes to 4,700 and then you get a 20% shakeout, you're basically buying it where you're buying it here.
These things are going to get overstretched. They're going to look overstretched, and we are all going to shake our heads and stroke our beards and say they're overbought and it's due a pullback. And yes, everything is ultimately going to be overbought sometime and due a pullback sometime. It's obviously worth repeating that Eric does think that this is now getting to a level where there's got to be a washout sometime soon, particularly for all those latecomers to the market who've been getting in really maybe for only the last 5-10% on a momentum basis. But the thesis for being long gold still remains. If you don't own any gold, well, don't chase it, but you've got to have a strategy for getting an allocation into gold in his view.